Okay, hi, Lakshmi. I had to look that up. Hopefully, I'm saying it right. Okay, so congratulations on your effort. You're showing a lot of good progress here, and this chart is very well done. Let me just explain it because reading your comments here, I'm assuming they're both wrong if the first is not correct and the second is a failed BOS. So based on your feedback and other people's obviously feedback, I'm making new videos. So thank you for that. So here I'll show you what we mean here. So let me just take a screenshot. Okay, so now you understand the ABCD, ABCD. You know how to draw that. So A is always 100%. B is always 0%. So you have impulse wave and then retracement. So Fibonacci retracement is measuring this retracement. So here we can see retracement went all the way back to 100%. This is what we call 100% retrace. Price either can consolidate after this or break out or go down. Anything can happen, but that didn't happen. We can see price. Well, let me erase this. We can see price came down, retraced all the way back to 100%, and then continued down. It's downtrend. So this would be considered not a break of structure because it retraced all the way back 100%. And sometimes sometimes you get a candle that comes up like this, half candle. But what I want you to look at carefully is you can see if you drew a straight line here. I can't draw a straight line right now. I'm using a mouse. You can see that no candle. See, no candle here. When I say closed, no candle closed above. So you didn't get a candle that's fully above. See how the body of the candle is fully above? You didn't get that, right? This is what you can see that this is where you could have entered a trade. This is like an ideal trade because um, usually retracement, like it happens here, like 100%. If you can see the next candle is, if you look at candlestick analysis and other things. But anyways, here you can see that it started moving downwards and you could have joined the trend and made a good profit based on Fibonacci retracement and market structure. So that's how it works. So this, correct, but it wasn't a break of structure. And then this is actually a great example. So the second example right here, let me erase that. So the other cases, yeah, sometimes see price, it came down here and it tried to pop. This is what we call failed break of structure. Yes, this was a break of structure. You're correct on that. But see how price quickly dove down? This is what we're calling failed BOS. I'm just going to put F for failed BOS. And that's what Michael Monday, our helper, is trying to teach. I'm going to come up with another video. This is what I'm calling failed break of structure. So you can see, yes, based on what you've learned, and fib, you can see, I think you put fibs here, A, B, C. So it broke structure, BOS, but it couldn't stay above. See, if I just erase this and just refocus on what happens right above this line here. Look, you got two kind of candles, and then a little doji thing. You can do candlestick analysis. Then you got a big bearish engulfing, and then price continued down. So this is what we call a failed BOS. Okay, I hope that helped clear things up.